Okay, what's going on, Tycoon? Super excited for today's video. Gonna give a market update. Okay, we're gonna start off looking at the SPY, the S&P 500 index. Okay, and then we're gonna go ahead and look at the VIX and also pay attention to /ES, the S&P 500 futures. And at the end of the video, we're gonna go over the most important data set that I think everyone needs to be aware of. Every hedge fund, every smart money, as they say, investor. Okay, large money, institutional money. They know this data set that I'm going to show you at the end of the video. So make sure you stay tuned. Okay. It's going to be very crucial. And historically, it's been 100% accurate. Okay. So we're going to go ahead and break down some of the recent price action of today. Okay, we have our volume profile over here. That's what everything in blue is over there. This shows you volume by price. Okay, most people are familiar with volume by time down here, but this shows you volume by price. Okay, it's very important so you can see the price levels where the volume is happening. All right. In the Discord today, I mentioned how we have a volume gap here. Okay, look at this volume gap right here. And we have a volume gap right here, suggesting if we continue this bullishness, okay, we're going to blow through this level right here, okay, this 375 level, or we're going to blow through about 373 and head towards 375. Okay, because the way market structure works is we move from high volume nodes to high volume node. Okay, look at where we were up here. All right, we have some high volume nodes. Okay, and we fall down. Look at where we fall down to. We fall down to another high volume node area. Okay, and we come down lower. All right, and we move from these high volume nodes down to high volume nodes, down to high volume nodes. Okay, that's just the way that markets work. All right, and if you understand that, you can anticipate some things a little bit more. All right. So going into the day, I mentioned in the morning, I said I'm looking at this descending wedge, which is a bullish pattern for a possible breakout to the upside. Okay, and I had a nice resistance level right here, and you can see that we got a perfect move. Okay, today was a really big day. Okay, Apple had some bad news pre-market. And you can see SPY was all the way down at 358 and we closed up here around 370. So, the SPY went up $12 today. That's a very big move. There was tons of juicy gains. Okay. Lots of members in the Discord. We were bullish. We were trading call options. Okay. So we were a part of that. So if you want to join the Discord, the link to join is in the description. Use code Zachly for a discount. All right. So that way you can get our intraday updates as they're happening from me and all of the other admin members, not just myself. Okay. Now, seeing that, okay, we did get the nice breakout of this descending wedge. All right, that's a bullish pattern. Look at what we're creating now. We're creating another descending wedge, okay, indicating that we possibly could come back up towards the 385 area. All right. Now, what would help, all right, that thesis, okay, is these volume gaps right here, all right, because we're going to move quickly through these areas. But this is look at our wall, okay? I wanted to draw a line right here. This is exactly where we topped out today, right at our last volume node before this volume gap. So we were not able to push up higher, okay? But you may see if there's some more news, right? Because the market rallied off of the UK bailout. Okay, that's what happened here, right? The UK bailout news came out, and the UK is basically saying they're going to print as much money as possible to try to keep themselves from going in a liquidity crisis. Okay, and having to liquidate some large institutions. All right. That drove the market up today, and that was the bullish catalyst. All right. So we have this pattern here. We most likely could come back down and test these levels. All right. But if we are going to stay bullish and break out above, it's a very nice pattern, and we will move quickly past 372, possibly up to 375 here. All right. And if we're able to move past there, we have another little volume gap right here that we could head up to the 380s. All right. Potentially even 385, giving us the full pattern play out of this descending wedge. Now, I'm not entirely bullish. Okay. I am pretty cautious right now. I'm not swinging any call positions overnight or anything like that. And the reason being, okay, is because we're going to go ahead and take a look at /ES now. Okay, the futures. All right. If we look at the futures, all right, and forgive all these drawings on here. Okay, but this is what we're going to focus on right now. And we're going to go ahead and go down to the 15-minute chart, right? And look at this wedge. Okay, look at this wedge right here. And we're already starting to break out of this wedge. All right, so I just showed you guys a descending wedge, which is a bullish pattern. Now we're in a rising wedge. So we're rising in between this wedge. It's getting very tight, and we just broke below. Okay, so we broke below, came back up, retested, and the futures have started to drop. Okay, so we may head down to this demand zone right here, right around 3,700. Okay, and if we break through that demand zone, and demand is not present, there's not a good demand imbalance to drive the price back up. All right, we could be heading back down to about the 3650 range. All right, so not entirely bullish, okay, but there is some bearish things to be cautious of. All right, most notably this rising wedge pattern that could bring us back down. All right, if we take a look at the VIX, okay, the volatility index. All right, I've been telling you guys, and we'll go ahead and switch the drawing real quick over here, and we'll put it on the quantitative tightening, okay, because that is what I'm really watching, okay. And I've gone over in the past in my videos how these have been good levels to go long in the market, right? And look at where we exactly found resistance at 34.55. Okay, we hit 34.55 today, and then we had a sharp drop, right? And if you've been watching my videos, you know that these have been good areas to go long in the market when VIX is above 31. Okay, now peak fear is going to be up here around this 38.94 level. Above 38.94 and higher, that is peak fear, and that is going to be a good time for you to grab some very long-term positions, right? Some long-term swing trades and things like that. All right, I know this chart may be a little bit messy to you guys, but I'm going to go ahead and break it down a little bit clearer for you. All right, we'll go down to the 1 hour chart. Okay, and I just want to highlight there's 1, 2, 3 gaps down. Okay, these gaps fill 90 to 95% of the time historically in the stock market. So you have to be prepared for those and position yourself to catch the gains from VIX being all the way up here to when it rises or when it finally drops all the way back down. Now, do I think that that's for sure about to happen very soon? No, I don't think so, right? There's definitely a possibility. VIX found some support here right at the 30.22 level, and we may see a bounce, right? If we go over here to my buying channels, okay, you can see that I was looking at the same pattern we were just looking at on the futures. Okay, it's a rising wedge, right? And sure enough, we got the breakdown today. All right, but the market is still trading in its bullish buying channels. Okay, these are algorithmic buying channels. Okay, that's what these channels are right here. And you can see we trade in this range, we break down below, okay, come down in here, we come back up, and VIX is just staying bullish within these ranges, right? So we looked and we see how VIX bounced at support, okay, or flatlined at support on the other chart. We're approaching, okay, the trend line here. All right, so we may see a move like this, okay, go down if this wedge is to play out. If the wedge is to play out, VIX could come back all the way down to 26, 27. All right, and that would be another short-term catalyst, right? One of the reasons that we were bullish today in the market, all right, was for me, not only this rising wedge, but look from this point here to this point here, there's a divergence. Okay, a divergence is when the price action is going one way and the RSI, okay, your relative strength index is going another way. The relative strength index is going to show you the strength of a security based at its current price level. All right. So what we saw was the relative strength index went down from this point to this point, right? And if we look from here to here, okay, from this high to this high, all right, we're making higher highs, but here we're making a high and a lower high, okay? So that was a nice indicator that the VIX could potentially be dropping soon. And then we got the market catalyst, right? So you always have to remember that price action is going to precede the news every single time, right? So you don't always have to watch the news to be able to know what's going on in the market. The price action is going to precede the news, and then the news came out, all right, that the UK was doing the bailout, and we see that the volatility in the market dropped tremendously, and that's when things go bullish. Okay, that's when the stock market is going to go bullish. So there's many plays up, 10% plus today. I know Beyond did really good. I know Cook, Traeger did really good. Lots of green stocks out there. Apple recovered very well after the sharp sell-off from its bad news. So it's kind of just my reaction, okay, is this video. And things have been pretty good, going bullish. VIX, if it continues to drop and we're able to break through this channel and head down lower, you can expect that for this pattern on the SPY to play out, okay, the descending wedge that we were looking at. All right, and we'll go ahead and pull that up real quick before we go into the data set that I told you guys was very, very important. All right, so again, let's look at that. If VIX continues to drop, okay, we can expect to see the market shoot through this volume gap right here up to the next area, okay, and this would be our next, resistance area here right around 380, 379. And if we're able to go above there, potentially we could come up to the next high volume node here right around 385. All right, so those are two things I'm watching out for. And I've been mentioning to you guys, when the VIX is above these levels, right, on our quantitative tightening chart, we can see that it's had a sharp sell-off each time, right? It comes up here 31 to 34, sharp sell-off. It comes up here to 31, 34, sharp sell-off, okay? But that doesn't mean it can't come back up to these levels relatively soon, right? We see here in May, we topped out at these levels. We come back down, okay? And then 1 month later in June, we're back up here at these levels. So we may see something similar, okay, where the market goes and we see VIX temporarily shoot back down just to come back up to these levels when the next CPI report comes out. Okay, you have to think the Fed rate hikes have been really based. They're saying that it's all data based, right? They're going to be focused on the data. So right now, things seem bullish. We have the bullish catalyst with the UK bailout, but next month's CPI is going to be coming out in a few weeks. We may see the VIX shoot back up. All right, so you need to be prepared both ways. All right. Now let's go ahead and look at the data set right here. Okay, this data set is the most important data set. This is the S&P 500 index returns, okay, based on midterm election cycles. Okay, so you can see ever since they implemented midterm election cycles, right, since 1942, all right, from November, all right, so look at here, from November, okay, to June 30th, we have 100% of the time been green. Look right here and tell me where it was negative. There hasn't been a time. Okay, so this is what I mean. Large money institutional investors know this. They're planning for this. They're looking at what stocks that they want to choose for this, right? And you have to remember, this is the S&P 500. Okay, so this isn't for penny stocks. This isn't necessarily for high innovation growth stocks, right? This is stocks within the S&P 500. All right, and you can see that 100% of the time, all right, from the midterm election date to June 30th, all right, it has been green. All right, now if you look from the beginning of the year to November, all right, the years that we've had the roughest, okay, like right here, down 20%, went up 6%. Okay, right here, down 0.17%. Up 16%. So if you're noticing, on a lot of the years where the market is down from January to November, okay, it's actually some pretty really, really good returns in that November to June cycle, right? Right here, we're down 23% in 1974, and we rallied 26% from November to June. Okay, down 8% here, we rally 18% here. Down 12% here, we rally 11%. So, these are some really big gains when you think about it. People generally tend to expect S&P to return from 5 to 10% a year. And we're talking a, 6 to 8 month period from November to June, where, there's the possibility that we could get 10% plus gains. All right. Now, if you're able to trade options on this, then it's going to further leverage that and increase those percentages. But it's very risky. Okay, so you have to have a game plan heading into this, and you can't just go into things blindly. All right. So that's pretty much it. I'd really just am focusing on this in the Discord. We've been going over, me specifically, how I'm expecting a red September, red October. Been holding some put contracts. I did close those after the big drops. Okay, Ford being one of them. Ford had some really bad news come out. Was able to capitalize off of that. There's lots of things to be prepared for, but I want everyone to be prepared for this November to June possible rally. Right now, the stock market doesn't have to repeat patterns, okay, but this is a very nice statistic to look at. Right now, it doesn't matter if it's Republican or Democrat or whoever. It doesn't really matter. The market really just likes finality, right? It likes knowing stuff, right? So Uncertainty is what the market doesn't like, and things are uncertain during the midterm election cycles until we figure out, okay, well, what's going on with the midterms? And once we have that and it has that finality, then the market can move forward and, really make some expectations versus uncertainty. Okay. The market doesn't like the uncertainty. And, the midterm election being finalized is going to give it that certainty and that finality to move forward and possibly repeat the pattern of being green 100% of the time during a midterm election cycle from November to June. Okay. So appreciate you watching the video. If you made it to the end, you're really going to like one of these next videos. And don't forget to like, comment, and subscribe.